Happy Monday, everybody. I hope you had a great weekend. The cold has made its way back to Chicago. Not so welcome. But today is December 5th, 2022, and this is your Back to Winter Monday Market Update. Last week was another roller coaster. Started out down, had a midweek rally, fizzled with some of the most important data we've seen, or at least some say. So let's jump right in, wrap up this past week, look ahead into this week. On Monday, stocks started the week gapping lower as protests in China about their zero COVID policy added a bit of Williams and Bullard on the hawkish Fed speak, and the markets were doomed from the start. Another one of those, no matter what happens, the sky is gray day. Seems like the algos again. Dow, S&P, and NASDAQ all down about 1.5% on the day. Tuesday was the day where, again, we got sound and fury signifying nothing. Back to some Macbeth. I bet you didn't think you'd get Shakespeare in this week's video. While being whipped around, opening unchanged, moving higher as the yields on treasuries pulled back. Then, look left, look right. The OPEC news, first, sources said that there will be no change in policy. Oil went lower, only to be followed by the end of the day with two other sources saying that they were eyeing output cuts. Back the other way with oil, and yields back towards the high of the day. Stocks hit sessions low again and ended pretty close to where they began. Dow almost exactly unchanged, S&P down a bit, NASDAQ down 0.5%. All eyes were on the jobs data and, most importantly, what Powell was to say on Wednesday. He has had this knack for making markets move with his words, like most good Fed chiefs do. Wednesday started the way things ended, pretty muted and quiet. Not to stay that way, though. ADP was weak, which in Fed language for the week is good. JOLTS was ahead of expectations, not good for Fed language. GDP was ahead of estimates, so growth is not all gone. Then Powell spoke, and once again, he made things move. By the end of the day, the Dow was up over 2%, S&P was up over 3%, and the NASDAQ was up almost 4.5% on the day. What was it that supercharged the markets? What did he say? It was dissected a million different ways, but one of the big takeaways was that he did say that it would be prudent to slow the pace of hikes. That moved the needle as of now. The market is squarely on the 50 basis points move in December, not 75. Sound familiar? This is not really news. So, did that really move the markets? I say no. What did move the markets is what he did not say. What Powell was set up for was a major gut punch to the idea that we are still full force aggressive on the attack of inflation. We all know that this is the case, but the more he had a chance to say it, he did not say it. That was one of the main reasons, in my opinion, that we saw the market rally. I did listen to the speech, and I will tell you that you may recall that the last big speech, I pointed out that he said it may be prudent to allow the market to break a bit, and then the Fed will use its tools to fix things. I found it very interesting that he said the exact opposite this time. He said specifically it doesn't make sense to break the market just to come in and fix it. Instead, don't break it. It was also the end of the month, and though few have given it credit, I do think that had a lot to do with the pile-on of the markets as well. Regardless, the markets thought what he said was good, so the sun will come out tomorrow, and everything looked fine for Wednesday at least. Thursday brought a bit of follow-through, but only a bit. For a while, stocks gapped open as core PCE came out. Remember, that's the eco data that the Fed watches the most, and it was still high. Sprinkle in a bit of expected jobless claims figure, and ISM manufacturers show a major manufacturing slowdown. Markets were all over the place, then settled into a range and went into wait-and-see mode again as the non-farm payrolls were due out on Friday. And as we've said, the labor market is the one that must get more balanced. As the Fed sees it, as long as the labor market is hot, higher wages will drive higher inflation, and we know that that is what they fight. Dow was down about 0.5%, S&P and NASDAQ nearly flat for the day. The all-important jobs report came out Friday, and it showed the labor market remains strong. And we know that that is not, repeat, not what the Fed wants to see. So as so many are starting to point out, jobs may not be cooling, but inflation in so many other places seem to have peaked. But that's not important to the Fed yet. On the open, due to the hotter number, the Dow was down almost 0.75%, the S&P was down almost 1%, and the NASDAQ was down 1.33% on the open. But pair the losses they did, but the buy the dip gang was back in full force, and by the end of the day, the Dow was up 0.1%, nothing too exciting, but far off the low for the day. S&P was down 0.1%, and the NASDAQ was down 0.2%. As it started, sound and fury signifying nothing. For the week, the Dow was up just slightly, the S&P was up 1.1%, the NASDAQ was up 2.1%. It was the first back-to-back weekly gains for the three indices since October. On to this week. One thing we won't hear from is Fed heads. Fed heads are in the quiet period, so if you're looking for a break from that news, here you go. We're also in between earnings season for the most part, so as Michael Arone from State Street said, things that are going to drive the market action this week will be geopolitical as well as headline economic data. As we look into the coming week, we'll get a lot of eco data and even some big earnings like Costco and Lululemon, but overall, we have to wait for Friday for anything big. Friday will bring PPI and University of Michigan consumer sentiment. And yes, as you may know, I went to Indiana University, so having to quote Michigan as such a linchpin in the news is painful, but it's there, and it'll move markets with consumer sentiment as well as forward inflation estimates. By the way, if you're wondering like I am when the next CPI report is, try December 13, and you want to guess when the next Fed meeting is? Yes, you're right, December 13 and 14, with the decision and the press conference on the 14th. We're getting started in the red this week. China, oil caps, Russia, earnings fears in 2023, and of course, inflation. We'll see how this week plays out. Like I said, a lot of noise, not so much message, but the market tends to come up with their own conclusion these days. Come back on Friday. We'll continue to count down until the end of the year with important things to do. Have a great week.